Hello guys, glad to have you on board again. Today I'm really sorry I couldn't make it to record lots of this week's podcasts. I try to make it clear I was really exhausted, just putting myself into some kind of burnout, kind of working from 7 a.m. to midnight each and every day, 4 days in a row. It really bursted me out. So now it's done. Let's set things straight. Things are a little bit better today. So I have more time to do the job I expected to do. It's just that I've been putting a lot of pressure on myself recently, just because I've been kind of teasing the new versions of the indicators and had a lot of work to plot before actually releasing them. So the only mistake I made in here is to tease you before it was actually ready to be released. And as I hate to do that kind of thing, just tell you something and not being able to release it right in time. So this is the only reason why I've been putting myself into working all those hours in a day-to-day basis, just to make sure that I could release it ASAP, because I shouldn't have talked to you about that earlier. I should have waited for this to be fully ready to release, so you won't have to wait. So the only reason I've been putting myself in that dangerous corner is just basically because I don't like to make you wait. Now anyway, it's normally it's ready, but to be fully honest with you guys, the problem is the baby, my baby boy, it seems to be pretty sick. He had fever earlier today, and the problem is the nanny is generally not allowed to handle him on those conditions. So I'm kind of expecting to receive a phone call at every minute to basically tell me that I have to go pick him up. So the thing is that if it happens, I'll have to spend my day with him, which is absolutely normal. It's no big deal, but it's just that once again I won't be able to handle the promises I've been making today again if this happens, because obviously baby boy comes first and ahead of anything else. So if this happens today, I'll do my best to handle this during this weekend, so make sure that you have the indicators released upon Monday. But there is still a lot of things to do right here. First of all, I need to terminate some algorithmic let's say final twists to make it sure to make sure that everything is fine. So a few changements have to be done here and there. Then afterwards I need to prepare for the release. I need to build up an email, build up a template, send the email to all the users, make a video, record new videos for the website, because new tools means new videos. It's a lot of work actually. And I really underestimated it when I decided to go public with it a few days ago. I really regret that, but I do my best to stand for what I said and make sure that you guys will have the products available ASAP. So no promises, but I hope it will be done until next week. Anyway, that being said, we're going to talk about what might be driving your heads crazy at the moment. The Bitcoin, who is falling. But yesterday's close is kind of not that bad. It respects the pattern I wanted to see. Somehow fewer volume yesterday and a lower shadow candle, kind of showing that after chasing stop losses, we're kind of missing the volume. So it's not really something you should be fully worried about, but there is still something that might not be great anyway, is the thing that the volume isn't that big. I was expecting that if we were about to make that bearish movement in order to make new lows and basically make a lot of headlines after basically dying for a few weeks, the Bitcoin had to make some kind of a strong comeback. You know what I mean? It just couldn't get back here with just a few movements. It had to be big. It had to attract people's attention. So seeing everybody driving crazy at the moment is absolutely normal, and we're expected to be that way if we decided to go to the downside. So the market decided to do that. So obviously everybody's talking about it, and that's normal, that's expectable. So what I care is not what people talk about. It is more like how people feel, and is there any advantage I can take out of it? To me, the answer is no, for a really simple reason. You know about my my scenario and my plans, and I just let it go. To me, the plan is a binary choice. Either what we're doing here is short-term volatility, we take down stop losses, we wreck all those who've been stupidly buying with leverage in the desert crossing phase. But that shouldn't be a concern to anybody who's been making buy and hold scenarios, because buy and hold is basically what we've been losing $500, and what else? To me, it really is a non-event, purely non-event. All I care is basically if we get ourselves back to that major support, previous support highlighted in here. If we go there, I'm ready to put an additional 5K into that market cap, because that was the initial plan. I said, okay, now we're apparently having the desert crossing phase. Remember, I bought basically right in here. And I said, okay, it seems to me that volatility is compressing enough to forecast, okay, that we might be into, sorry, just give me a second, I have a trade to take. All right, sorry about that. So we'll see how it is, but in the current scenario, in the current thing, if we just go there, yes, I'm ready to put this additional 50%. That was the plan. It's just, yes, facing uncertainty of what the market may do. I don't want to be following prices if they happen to go to the upside right after. So this is why I decided to put 50% in. So just to make sure I will be in and ready to face any cases. Any cases being, to me, three choices. Either we reactivate bullish from here, strong investment money comes in, and we just basically create a huge support out there that we'll never retrace down to. That was option number one, the most bullish one. So I don't think it's going to be the answer. And what we have right now is kind of proving it. But I had to face that uncertainty. So some way I had to put some money in there. It's just I needed to do that with an according money management. So this is the reason why it's been done in a buy and hold, because I just didn't know if we were to go lower, and if we were about to do it, how low could this go? So facing no possibility to answer that simple question, the only way you can invest is that damn buy and hold. So put a tiny amount of capital in there and no stop losses. The second possible path I was expecting, one on top of the most probable expectable scenarios. Second one was possibility to wreck the buyers in a strong bearish move, short-term move, speculative, highly volatile, to just go take down stop losses that could go as low as below 4K. If we are about to do it, and what we see in here is the initial burst that will lead us there, then I'm ready for it. All I do is basically add the 50% that has been sparing for that purpose. And if we go there, I'm buying because that's my plan. And then, after that second buying entries, I'll do nothing for 2 fucking years. And in 2 years from now, either this thing will still be lower than those prices, and then I'll basically have taken myself into an asset that doesn't really gather interest anymore, and that's a possibility. And option number 2 will be we finally find some investment in that sector. Money is bringing in, prices are rising, getting above 6,000 again, and I'm making a fucking gain. That's all I fucking care about. It's a binary choice afterwards. At this point, we have 3 options. Either it reactivates, either it does nothing, or it goes below 5K, below 4K. I have a plan for each of those 3 scenarios. And if we go below 5K, there will be just 2 choices afterwards. Just working out or not working out. And that's how it's going to be. I mean, I'm not driving myself crazy because we have volatility after just doing nothing for a few weeks. That's for the dumb money to move. You don't move out of those prices because it's not part of the plan. Right now, you should really see the market like that. Anything that happened in there is none of your fucking concern. As long as we don't move in here, this is a damn black box. Anything that happens in between is for dumb traders to care about. Right now, it's a binary choice. Either the market goes there and you have interesting prices to eventually buy. God damn it. Let me put yourself into the front. Okay. So, yes, binary choice. Either we go there, we have interesting prices to buy again for the additional 50%, but only to those who have decided for that plan in the beginning. Okay? If you had 5K to invest in Bitcoins in the initial plan and you already put those 5K in the desert crossing phase, you're not going to add 5 more Ks. It's not going to work out that way. If you already put everything you had to put in there, you simply have nothing else to do right now. You're already into the binary choice of either it's going to work out or not in a 2-year from now basis. So you just wait. All right, if you made that investment, just get the fuck out of here and let the dumb plays at the short-term movements. It's no timing to speculate. You don't sell those supports after that long bearish outburst. I was ready to sell, and I was the first one of those who were selling back then because it was low risk to sell. Right now, it clearly isn't the case. Hey, sorry about that. I'm basically watching out for the trades. I'm going to come back. We were supposed to make an intraday trade today, so we're going to review what I've been doing this morning on the DAX. So we're going to talk about that right after. But first we need to talk about that because, yes, it's swinging heads right now, and you should be among those who are talking right now. Those who talk right now are basically dumb money, or guys who are taking too much risk getting into short-term trading, as it's absolutely not the context to do it. Short-term trading or speculative trading was, of course, great to do right now and back then, but obviously not right now. There's no timing to make short-term trades. If you think it is, then oh gosh, really you're taking heavy amounts of risk that you're just not aware of, and you shouldn't be doing that. So anyway, aside from that, we're going to talk about major swings that are still at play currently. So gold is trying to find itself a support, as well as silver after trying to break down major supports. GBP is kind of stabilizing, and we'll see how it goes in the next few days. But it's not that bad. We're still in the range, so don't overthink things. As long as we don't break down boundaries, then there is nothing you should be concerned about the GBP-USD scenario. EURJPY is still heading to the downside, and that's good. So meaning GPY is finally reactivating, and that's hell of a good news. It was part of the plan. Absolutely beautiful, perfect signal down the bottom, and the market is reactivating out of this. So that's great, and you can expect that moving to keep going forward in the next few days and weeks. So it's early stages of what could be a potential future trend. So yes, don't be panicking if we just make oscillations in here. That's normal to make ups and downs at that stage. It really is speculative trading, so don't look at for trend trades kind of candles like that. We may have a couple of those ones. It's possible, but it's just don't expect to go really fully trendy like that right now, okay? I don't expect this to be coming in the next few days, but could be next week, in the next few weeks, but not necessarily right now. It's not the timing for trendy trades. All right, but yen is doing great. Dollar is kind of slipping slowly but steadily. We've been shortly, but we've made it, and that counts. We've been breaking below yesterday's low for just a tick, okay? So it's just really, you shouldn't be looking at DXY in a 2-minute basis, but at some point this is important, that tiny tick we've managed to make below the previous day's low. It's just that right now we're going to consolidate for a bit, just work it a bit, digesting things, but I expect the dollar to keep on going forward and go breaking that low right after. Okay, so it's just letting it go, but to me, dollar remains bearish, so that's good. It means that anyway, even if euro and GBP has been under heavy pressures recently and had that kind of safe haven demand for dollar, I still think that anyway, dollar remains under bearish pressures as well, But this is just a matter of timing. As long as we will have cleared out that Brexit danger and Italy, that it's a little bit over. It's a little bit too much in terms of reaction. So at some point there are lots of concerns to see for the dollar as well. So it's just a matter of thinking who's going to take the advantage at some point. And I think right now dollar's been taking it for too long. So we're probably searching for a top range on dollar. And if you just have a look at a weekly chart, you'll see it a lot clearly. Even a monthly chart. I mean, just have a look at that long-term trend line. No, not this one. Sorry about that. What the fuck am I doing? I know it's on dollar yen. Yes, dollar yen. You can clearly see that beautiful trend line. We've been making second contact in here. I expect this week or next week to be bearish engulfing. So if we could do it that week, bam, going in there, making bearish engulfing, that will leave us with a pretty nice bearish outburst to make next week and get back first to the previous bottom of the range. And I expect us to go searching for that bullish channel, that bullish bullish framework channel, to break it down. Go searching for the major channel in the future and make lower low after lower highs. So you can expect us to go there, work that price area, work that Fibonacci retracement, expect some rebouncing in there, kind of building a range on USD yen as well. I don't know what this will look like. Probably we can forecast this to be playable some way. Okay, we can eventually do this one more and then we go. Okay, it's one of the many possibilities, but I don't see us holding that support. I think we're gonna work it out and fuck it up and accelerate. That's part of my plan, but we'll see how it goes. All right. So that's something that we need to bear in mind for now. It's long-term scenarios, probably things that we won't trade. I think that trade is the last one to make for 2018. It's probably going to last 1 to 2 quarters, and then next trade is going to be made second semester of 2019 and probably not before, probably end of summer 2019 for the next big swing to trade on dollars, AUDNZD, and everything like that. So AUDNZD, we're going to cover this one up right away as well. We're trying to build a bottom, but yesterday wasn't that big of a day. We kind of made an upper shadow candle. So it's not hammer pattern, because the hammer pattern has to be the bottom. So we made kind of a tiny but still lower shadow, upper shadow. So consider the market. It might be necessary to range for a few days in there. Eventually go slightly lower. Is it still an option in there? But I would expect the market to range in here. Lower shadow candles, upper shadow candles, until we manage to find a clear direction out this market, but probably just next week. Okay, I expect us to make that lower shadow candle this week, work it out a bit next week as well before making the breakup. So I expect next week to make this morning star kind of pattern, like we've done every time or multiple times going at the lows, evening star pattern. So I expect us to make another one in there. Evening star pattern as well in there. So lots of evening stars, and I think we're about to make another one, which means next week's probably going to be the finally a validation for us into AUDNZD. I hope it will be the case. We'll see about that. Momentum seems to be pretty good about that. We're working that thing. So you cannot trade in here, but I would say in a daily chart time frame seems okay. We might, as you can see, no momentum validation in here, suggesting that we could still have some lower shadow candle trying to break that to new lows. It's an option, but I don't see it that way. I think next week we're just going to basically wait for a market to exhaust itself in here and go break up. So I'm just waiting for now. It's way too early to put the leverage back in that game. I'm still bullish on that market, still have leverage in here, but low leverage. I'm leverage 3, and I'm waiting to have confidence again to make fully leveraged scenario back in that game. All right, I think we've covered it all. I still think for some reasons that the US equities haven't terminated their game yet. I still think that the VXN has some high probability to make a higher high, not necessarily 48, I don't know, but I still think somehow it still smells blood out there, and I see sharks ready to jump on them. So I would say, okay, don't think it's over yet, because we're in a totally different context than we were back then, and really everything suggests that. As you can see, volatility might be dropping, but we're still trading at very high level of risk. So don't think that it's going to be like it's been earlier that year. It's not going to be the case. Probably we're into, it really seems like different scenarios to me, different contexts. So thinking that it's going to be a copy-paste kind of trading really seems like a bad option to me. So don't be too aggressively bullish, because it might be the worst choice to make. All right, so wait for it. We're going to have a look at this in terms of NASDAQ. I don't think the panic selling could be coming into SPX, but I think we might have panic selling, especially comes to NASDAQ, because of Apple's and all the big names. We still have a lot of bearish potential, and we're waiting a lot into NASDAQ. So I still think that somehow the tech sector might have another final drop where everybody's dropping. The Teslas, the Apples, the Googles, the Facebook, the Nvidia, on a final burst, okay? We make everybody panic selling those assets, and then the smart money will buy them out. But I don't think they are doing it right now. I don't think they are buying. I just think they're making you thinking that they do, but I don't see a price volume pattern suggesting they actually do. All I see in here is that they're maintaining sustainable temperature for the frogs not to fear out, and they slowly but steadily cooking you. Okay, that's what I don't know if you guys have such thing in English, but we have some kind of phrases. A sentence in French that says, if you want to cook a frog, if you put it right into the boiling water, it's just gonna jump out of it. But if you just put it into cold water and make it warming up slowly but steadily, the frog's gonna die in here, because it's gonna slowly rise the temperature, and you're not gonna notice it until you're just boiling into the water and just dead. So I just think it's exactly that same kind of thing that's happening right now. Danger is there. Lots of people think it's not gonna happen, because multiple. These was like warnings. It's like red flags that should tell you that the party's over. It really is. But for some reasons, they just let you that tiny amount of hope, thinking that this is just short-term rebounds, buy the dip situations, things like that. I really think they've been buying the dip in here eventually, but they're clearly not buying the dip in here. The structure is really different to me. And all I think is that they're maintaining the depression. Okay, as you can see, lots of volume is exchanged. I think they're buying a bit just to make sure that the market is not collapsing. So the guys who've been buying the top are not flying away of the market right now, because if they want to buy, they want to buy the losses of those who've been buying in here. So I suggest this drop is not enough to buy. To scare those who've been buying in here, probably going to have to make them panic sell at lower prices. But you don't want to be scared. You don't want to scare them out right now. You just want to make them think that we're in that kind of context. So obviously they still think they're going to make profits, because those who've been buying the highs, they really believe that we're going to make some kind of this, who was this, and that then we're going to make that. Okay, and obviously they're going to make gains. They will suffer some subsequent losses at the beginning of their investment, but buying Apple is obviously going to produce gains. No, fuck it, it's not going to be the case. We're buying companies. You're not buying some stupid thing. The stock market isn't just playing with prices. It's not how it is. We're playing with prices and volumes and smart money and dumb money. And right now we have a structure in prices suggesting that we have lots of dumb money at play right here who's been buying a fucking market top. And when we have that, when we're early trending, no problem. But when we are late trending and the dumb money buying the top, suggesting the market is just topping up in here and that we're going to have make lower lows afterwards. So I'm trading this way because I think it's still going to be the case. We're going to make lower lows, but just we're not going to make it that brutal. We're just going to maintain a sustainable level of hope for those who've been buying here to think they're still going to make gains so they don't worry about what's happening right now, even though they should be fucking worried, because I think we're just going to range a bit and making them understand that this is not going to be the case. But that wave, don't expect it to be tiny and like that. It's going to be straight line panic selling. They're not going to letting you get out. What you want to buy at Wall Street is panic. You don't want to buy when there's still fear and hope thing. We're oscillating between fear and hope. Okay, when we go there, they're fearing, but they're no panicking. When the market goes there, they're hoping that, okay, we've made V-shape. Oh no, we're not making it. We're rebouncing again to the downside. Shit. Gonna go there. They're gonna say, oh, great, great, great. Hope, hope, hope. Okay, see this? We're probably gonna work out that trend line for a bit. They're going to be there. Okay, great. Then triangle. Last time we've made triangle, it was bullish. So they were just going to see it every time we're going to have a 50-50 choice. They'll all see it bullish, even though everything suggests we'll go bearish this time. And I think this is where I'm going to make huge amounts of money. But right now, we're just going to need to breathe in and out for a few bits, for a few days, few weeks. But I think early December could be just as bearish as it's ever been before making the V-shaped structure. I think anyway we're gonna terminate the year near those prices, so near the European prices. But I don't think that the Nasdaq is gonna make its entire years on positive values. Just have a look at the Nasdaq 100. If you have a look at this in a monthly chart time frame, all right. Just delete everything. Do you really think the Nasdaq is going to close like that without making lower shadow candles? I don't think it that way. I've been clear on this since January 1st. We'll set ranges everywhere. And I think range in the Nasdaq includes a lower shadow candle as well, just like we've done in the SPX. Okay, lower shadow candle, upper shadow candle, closing nearly at the open is what I thought would be the case right upon 1st of January. And I think that this lower shadow candle, no, clearly not enough. I think we're going to get ourselves to those prices first, making panic selling, and then rebuying at the end of that year. So keep those prices in perspective. Okay, just have a look at the volume. Look at that. We got absolutely no volume in there. So you're really thinking that we're not going to get ourselves back in those prices? No, it's not how it works. Okay, trading is not about that. We might have traded prices with a brutal outburst. Yes, we surely did. But look at this. Okay, we've got volume in there. Look at the volume profile and search for breakups. Okay, I would say in here is where we're probably going to break. So 5,800, first level, I think we could get ourselves down to. So have a look at that level. Okay, right here, you search for breakdowns. Okay, areas in which we have lots of stop losses. We're probably going to go slip below and search for volume. So in here, 5,700 is where we've got bullish support. Okay, we've got another bullish support, 5,900. Okay, so below those prices is where we've got support. We've got volume to support prices, meaning you don't want to buy those prices, you want to buy below those prices. Okay, is where you got support area. Okay, so it's support and break. Okay, consider this as a long area. But I don't think this one is going to be the good one. I think we're going to go to the lowest one and break down the first one. Fuck it. All right, so I think it that way for Nasdaq. These are the areas you want to buy. Okay, not before, not after. You wait for this fucking price to come up. And where do we have the biggest amount of volume in here? Is it there or there? Okay, I don't know, but we're going to take the two of them. All right, this is where you want to buy. So have a look at this now in a daily chart time frame. It really suggests what I just told. We make a fucking V-shaped structure. We go search for those two levels. we make and trigger panic selling. In here, the retail traders will just really be fucking bleeding out there. They'll be selling, panic selling, even though those prices are interesting to buy. It's a low boundary of that range. So to me, top of the range, stupid traders buying at the top, stupid traders buying what is probably going to be the Dom zone area. Okay, consider it that way. Remember what the range trading scenario is. If this really happens to be the bottom of our range, god damn it, you're trading right into the Dom zone right now. Okay, so don't think that you should trade those prices. I think, to me, really we should consider this as being, this area probably is where you want to buy. This is where you've got really interesting prices to trade. Okay, not before, not after. Everybody who's going to trade other prices basically going to make a huge mistake. Those prices, to me, not interesting to trade at all. It's just going to oscillate in here. We're going to spend time because it's dumb prices. We don't spend time into interesting prices. Interesting prices, we just go there and why did we spend time in here? Simply because there was no volume, okay? It was tiny amount of volume executed in a day-to-day basis because we had big sellers versus tiny buyers. So in those conditions only we need to spend time, because those who want to sell have high volume to sell, and those who are buying tiny amounts of volume. So they have to be exchanging hands byte by byte, day by day, in a tiny volume, and then the market regains volatility. Just show me what I thought. Stupid guys who've been buying in here where the smart money has been selling them what they bought a few years from now. So yes, long-term selling, short-term buying is never going to end well. That's a distortion that generally drives prices lower, and not in the short term, in the long run. But first, before reversing the long run, we create ranges where we're tracing those ranges, and then we install the bear market. All right? So think step by step. It really is necessary if you want to get yourself into trading the stock market. To me, it's dangerous to trade in that area. So I'm no longer heavily bearish. But if we go to break this down, you can be damn sure I'm going to add some money into that market just to profit from that bearish outburst. But in here, I'm buying the stock market. I'm going to tiny buying, but yeah, for sure, if I see panic in the market, I'll buy the panic. I'll buy it, certainly. But with tiny amounts of volume, because what I care about is the next big sell next year. Because next year we're going to rebound, and I think in here we're going to have very interesting selling entries. Okay? But anyway, we're far from now. It's just to have some longer term perspective. Now we go intraday trades because that's today's objective. So let's go back to in here. All right, we're going to do as usual. I'm going to take care of the German index. Just going to show you how I made myself to build today's scenario. So first things first, you always have a look at the cash market. Okay, when you do want to trade intraday basis, you need to have a look at the daily chart first to have some kind of global view, but you need to have a look at the cash session. It's important. You don't have a look at the German index, as you don't have a look at SPX 500 with the futures included. You need to have a look at SPX if you want to trade SPX, or NDX if you're trading the NASDAQ. Okay, to see if there are problems in the price structure, gaps, or things like that you won't see if you're having a look at the futures market. So in here in the DAX, what the structure is basically the market is dying in some kind of washing machine kind of pattern. We're going up and down, up and down. We can clearly see that we're making new lows in that channel perspective. Okay, so we're just going to recreate that channel in the 15-minute chart time frame, the one I'll actually get to trade on, and then having a look at further informations. From what I can see, okay, damn it, no, we shouldn't be doing it Deutsche 30, we should do it German DAX. So in here, we're taking care of the future prices, all right? You build your channel in here, and as you can see, it's pretty much confluent with the areas I've been highlighting by the indicators. So it's great, okay, we're ranging bearish. You can clearly see that the market is oscillating into the big boundaries, okay, it's chasing up but failing, okay, we're breaking the channel, failing, breaking the channel, failing, breaking the channel, failing, 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 failing. So obviously range, okay, when it comes to the short term. So The local time frame is a range inside a big consolidation, okay? So what we thought, we have the big trend channel in here, okay, in which we're going to trade. We try to sell high, buy low, and what we do is that we trade when the market breaks the trend channel, the short-term channels, okay? So in here was a nice buying entry yesterday on 15-minute short time frame, okay? Now we try to find and do context in here in 15 minutes. We've got nothing to trade in here. We're at uninteresting prices, okay? That's what it is. We're not trading the boundaries, so you can expect the market to break these boundaries. So I would say, as we're positive, I will be trading mostly bullish on the intraday basis, but we can trade both sides. But odds are bearish consolidation, okay? So range going to the downside, but with a bullish perspective. So I'd say range bullish. Consider this as being a bear flag that we're probably going to break higher. So you mostly want to buy at lows, but you can expect lower lows. Okay, I think we can go slightly lower in here in the DAX, but I've been buying anyway earlier this morning, and I'm going to cover this up. Okay, so you know what the scenario is. So yes, I know you might have some differences regarding signals because yes, the update is going to be released earlier today or later today. I'll eventually release you that thing. It's just a thing I've been using to backtest recently, and I've been using it to trigger alerts. So yes, okay, it's basically searching for triple signals of the indicators. I'm thinking about releasing this because I really don't like the idea, and I know most of you guys will try to make automated trading out of this, which is the worst possible thing to do ever. But okay, if you contextualize this, I use this to trigger alerts. So basically, I've got the alert triggered right in here, took that trade. So right now, I've been buying at the lows. I'm pretty great. So right now, I've been making that buy entry. Okay, not this one. Why not this one? Please tell me. Please somebody tell me why I don't take this trade. Okay? I said that we're ranging, which means we have to break boundaries. When the channel is in here, I want to see the market breaking through it. Okay? So we had the channel, break through it, buy it, and then now I'm looking at, I'm just waiting to see if the market's going to hold that Fibonacci level, which is the 23%. If the market's holding this one, then good. Okay? It means I'm okay, and if we're holding that support, we're probably going to have to break up that trend channel and validate my scenario. If we don't, meaning that trade is at break-even right now. If we fail in here, if we break down and return back, we're going to break down the trend channel once again, go lower, probably searching for lower Fibonacci level, this one, or eventually this one. And this is, I simply have to buy again, okay? So I'm just waiting to see and have the answer right now. I'm working that price area. If it reactivates bullish, then it's good. If it doesn't, means I'm going to have to get out and buy at lower prices. All right? So I expect if that support isn't a good one, I would say this one is the next one. We've got strong support in here back there, or medium support back there. So I would say in that area is the next area I want to consider trading onto. So I'll see and wait for a signal in that area. I'm not going to blind trade. Okay, it's speculative trading, so when it comes down to this, you don't want to just blindly buy. Okay, it's just we had support back then in that price area. We'll see if that support is still there. Okay, it's Fibonacci retracements, technical area. We'll see how it goes. If we slip below that price, I'm ready to buy some kind of a lower shadow candle that goes below. No problem with that. I'll just wait for a signal in there. If there are no such thing, I'm not speculating. All right, I'm out. You've got the answer. Prices are going lower, but I'm not that big of a concern, okay? It's brutal. Might have a catalyst right here. What time is it? Well, not necessarily. The market's just going down. Okay, so I'm out. Yes, stop loss been triggered. So no problem. It's a break-even stop loss. So I'll see right now. Just put an alert out of the market top. So if we go there again, this was just a stop hunting, but I don't think it was. Just going to delete this one. As you see, this is how I do trade. I mean, do you see me panicking? Something happens? No problem. It somehow it was expected. So right now we've got two indicators signaling right now. We've got an interesting price, and sine wave says okay, but we have absolutely no momentum. So I would say trading right now is not an option until we manage to reactivate to resistances. So if we create a support in here and break down those resistances, I'll be in that market for sure. But I don't think that's going to happen pretty soon. Okay, so you can put that. Okay, we've created another. We just created another dynamic resistance. As long as we remain below that price, there's nothing you should be concerned about. So you can create this instead of that. Okay, you can see it that way. Yes. All right, you do it as you want. Generally I do this and I put it slightly higher to make sure I'm not going to be triggered too early. That's it basically. Okay, if that signal happens to be the good one, it will be confirmed by breaking up that trend line. In that case, I'm going to put back the money in there, but on a breakout trade. Okay, and it just means I've been speculating, but the market wanted me out before breaking up. That's a possibility. We're into dynamic market, but I don't want to take a loss in here. What I'm most interested about is if we get ourselves in that price area, and if we trigger another double bullish, I'll be ready to buy. All right. So questions now, and then I wish you guys a great weekend. So let me switch to English. So yes, last English briefing was on 14th. Yes, I'm really sorry about that. Yes, that's how it is. I mean, I'm just focusing on indicators right now. My my number one priority at the moment, just to make sure I make them finished and good enough and suitable for a public release. I don't want to release good enough products. I want the products to be the best possible. Okay, so that's how it is. So it would be very good to see the difference between trend. Also maybe different colors and time frames, and maybe Fibonacci level with numbers. No. Too much stuff in a chart is not good. You need to have the essential, and to me the essential is this, and that's already a lot. I mean, in terms of charts visibility, it really is. It really is the maximum I'll authorize. It's already a lot. Okay, lots of information to process, and as I've been clear with that, you need to have enough information to limit the risks, but too much information isn't beneficiary. It's gonna introduce doubts, and doubts is the worst you should have. You should get yourself into. Okay, so. So, no, more information is no good, all right? Just want to make this clearly, to set this clearly. So, I would say wait right now is the best option you have. Moving on. So, other questions? As a critic, I can say something about the context. Maybe you should put a little tag of every time frame, like the 1 day, 4 hour, and so on, to state what they are about. But some sort of tag, color lines. You have to be a little bit more explicit out there, because I don't really get what the. I think what you say is interesting, but I'm not sure I really catch what you mean. So I would say just be a little bit, give me a little bit more details about what you think on today's video's comments, and yes, I'll take that in consideration. But yes, and by the way, if you think about colors, you know, you need to know that you can reshape everything in there. You got lots of styling that you can repair for some reasons. Okay, so all of this you can change that. If you rather like to have lines, I'd basically just give me a second. Okay, so yes, I think I got your point. So just let me make a few updates in here. All right, I just made the update, so just tell me if this is what you were talking about. So right now I just gave you opportunity to edit all those lines. Basically, I just deleted that thing on the previous versions, and now you're going to be able to make this if you feel like it is. So you can edit all those things. So you can set them lines. It's basically fully transparent right now, which means you can set them visible. Okay, you see now this is a step line that you can edit. Okay, you can do it. For example, if you just want to trend support. Oh shit! Something's wrong. It's supposed to be trend support down in here. Let me another. Thank you guys. All right, that's another bug. You can see that's how you do. These are the kind of things that I'm watching for in the next few days to make sure that when the release is done, there is no such thing. So you can see still a lot of work to process. So anyway, it was just a tiny mistakes of naming them. So yes, now the trend support up is the up line of the trend support. Okay. So if you just want this one, or if you just don't want it, you delete it, okay? If you want to color the downside, so if you just, for example, you want to see lines for the trend support, you're going to make this and this, okay? You put lines out there, you delete the down, or you just, it's fully transparent, so you can basically just let it go. You want the context support down, so you want to know when you're entering context, for example, you're just going to make just the context down, okay? And you're going to make resistance down, all right? You're going to do this and this, delete this one. And you're going to, if you don't want the shaded colors, you just delete them, all right? So you delete the background, so now you just have this, okay? All right. You're good to go. You just wanted lines. Now you've got lines. It's simple as that. You're going to make those ones more width. And you can have that, okay? Short-term channel, long-term channel. If you wanted them, if you want those lines more transparent, to be a little bit more shady, you can just do it, okay? You can edit everything. So you just play along with those things and make it the way you like it, okay? If you think it's better that way, then go for it. I mean, you just have to work with tools that are convenient for you to use. If you rather like it that way, then, as I said, really do it that way. I see no problem with that. And just understand what things are. Yes, and do you see that? Yeah, we got a triple signal as well in here. So I would say interesting, though, it's an exit. So probably I'm just going to take again that same trade, same price. Just wait for a couple more candles. But yeah, it seems kind of interesting in that price area. We're trying to build another support. The exit is still pending, so please don't trade before it is, okay? But if that candle confirms by closing with that exit, I'll say yes, eventually a second trade in here might be an option. I'd say the Fibonacci level is slightly below, so I might be waiting for the price to test the Fibonacci first. But in that area, kind of a buying entry seems to be a viable option. Anyway, all right, so I'm just waiting for this to come. Anyway, I'm going to keep on going. Give me a second to take that trade if it has to be. Oh, and by the way, you can also change those things. I mean, you can, for example, if you don't want to step lines, if that was the other questions above, you can use circles. It's going to be acting like dots. You can see now it's no longer, yeah, it's dots on each bar. You got to put a dot. So you can see it that way. In some way, you can just fully customize this thing. And see it that way. So basically, I actually do like it that way myself. So I'm just gonna, at least for the short-term channel, seems like a good option to do it that way. So I'd say yes, and probably use the 50% context line as well. So not 50%, yes, and for For example, this one with the circles is great. Yes, that's cool. That's the 50%. And yeah, the context. I don't want a context line, but I do want the context areas. Alright, so this way you see when you're trading in context or not. Okay, context remains a bearish trend channel, so you need to be paying attention when you're buying. We're thinking the price will rise. I didn't buy right now. I think we're going to go slightly lower. The signal is there. Okay, so I'm ready to take the breakup. If the breakup occurs, means that this is where the buyers have been playing their game. But I think we can go slightly lower. The Fibonacci level is lower, so I want the market to test that price first. All right. So maybe creating some kind of divergent momentum in here. Just go slightly lower, testing the price, and I'm ready to buy in here if the momentum is divergent. And this way I'll be ready to get a color of that market. So just waiting for this right now. Remember that what you want to pay is prices, okay? So if you had bought that price, I would say okay, but the problem is the pattern is triggering a few bars afterwards, and buying in here seems not like a... And moreover, you need to have tested the level first. If we would have made that lower shadow candle on the level and triggered the exit pattern after, I would have been confident enough to buy, right? I mean, we're going to make that buying entry right in here. We're going to make it live, okay? So you get some kind of live trade. I don't like to do that generally, but I'll do it. So let me just pause on that video and just wait for this to come, and I'll tell you when. Just take another comment. So let me just... okay, I just spared out. Just put an alert in the trading station. Sorry, so it's on another screen at the right, so you won't see this. But no worries, I'll do it live anyway. So yes, that's a possibility. I just think for now it's short-term speculation. We'll see if it goes on a bigger time frame to search for breaking down 4K. At that point, it's really impossible to tell to me. Yes, I can do it. I mean, that's if you think I'm preparing those videos generally, you just got it all wrong. The way I analyze things is like cold-blooded, and you can basically give me anything that trades in cycle, has a market cap, and normally I should be able to make that same analysis. So yes, that's the best way I think to show you how this works. I basically don't care what I trade. As long as I identify patterns I can take advantage of, I'm ready to trade this. The problem is I rather like to get myself into something that has at least a minimum market cap to make sure that there will be no liquidity problems showing up. Sorry. Okay, trade is on this way. All right. Testing Fibonacci level, so the price to pay is in here, 370. I'm ready. Mouse on the button. So you'll see me taking a fucking live trade right now, okay? I generally don't like to do this. Okay, so we knew about the plan. Momentum is divergent. We're going to test the level, so I'm going to make a tiny speculative trade in here on the level, and we'll see if the market is showing some signs of reaction. If it doesn't, but I'm doing this because we still have at least two elements. Sine waves okay, prices are still okay. Alright? So as long as I have those two, I'm ready. Fuck it. Shut the fuck up. Alright. So waiting right now for the price to test the level. Price is 3730. Just gonna put a limit order. Alright. Come on, motherfuckers. Oh shit, I made a mistake. Oh god damn it, the 38% is just right above. That's a stupid mistake I just made out here. All right. So I may just need a tick below, and actually we may have already done the low. So I'm just gonna wait for a few bars. But if it breaks, I mean, we barely tested the level already. So we'll see if we can have a lower tick, just one tick below will be great to be caught in here. But that's a stupid mistake I made. I just deleted those Fibonacci a little bit earlier. I shouldn't have done that, because I thought these ones would be the same, but it's absolutely nothing to be, it's not the same at all. These are the major Fibonacci retracement you see on the big context time frame. So yeah, and fuck it, I'm out of timing. All right, so market is buying. So I'm going to take the breakout trade. So I'm just going to let it go. If the market offers me the tick below, I'll take it. But the problem is that stupid mistake with the Fibonacci level is going to cost me that low. So I'm just going to wait for it. But as you can see, we clearly have the divergence. We got everything we were forecasting it to be. It's just that I stupidly expected the wrong level, which is a stupid but common mistake. So now, right now, it's just like that. So whenever the market will break this up, it's going to be good. Or maybe we can have a little something in here. All right. Maybe they're going to give me my price. Gonna try to slope below it. A tiny level, tiny demand of volume in here, right at 38.2. So yes, we could have that tick to the downside, just a tick. But normally I want to see the market tested first and then making a bullish engulfing. But right in here we're failing the bullish engulfing, which is good sign. All right. So I'm just waiting for this. I'm gonna take it live, okay? I generally don't do that, but right now I'm trading on the god damn it, I can find my word today, on active trades account. So I'm not trading the pro my pro account. So it's a smaller account. I really don't give a shit about trading live on. Otherwise, I generally don't do that. You don't make live trades out of big numbers. You don't gamble with the money. All right, so we've got the tick. Market has been tested. Okay, I don't like the way the previous candle closed, so I'm going to wait for market excess. Momentum is still divergent, so that's okay. So I'm going to wait for that level to be tested. Eventually, try to slip a little bit below it. We've got another level to test, which is 366, where we've got, oh yeah, and the market is going for it. All right, perfect. So I'm going to wait for that level. All right, go for it. Okay, I'm waiting for a bullish engulfing pattern. Whenever the market will make bullish engulfing, I know the bottom will be then. We've tested the levels I wanted the market to test, so for now it's okay. The job is done some way. I'm just going to wait for price confirmation. We're trading the divergence in here, so momentum sees no pattern because it cannot. It's been putting the exit structure in here, so it cannot trigger another divergent structure in here because there is a minimum distance between two signals. All right, but I think that we just let it go for a few bars. Even if it goes lower, I don't really give a shit about that. It's just right in here and right now, I wait for the prices to make sure they find the bottom on that divergent structure. And anytime we make the bullish reactivation out of those prices, it's going to be a buy entry to me. Oh, 1 hour long video plus a live trade. So yes, maybe I didn't make a podcast yesterday, but you're gonna have a hell of a good one today. All right, lower shadow candle sounds good. I'll see if the market keeps pushing lower. or if we're done already. It's not the best timing actually to trade right now. Well, 11:30 p.m. So yes, we're ending the Euro session, terminating. Got low volume at that stage. So you can see volume is dropping out of today's session. It's 9 a.m. in the local time frame. So it's Euro session opening and volume is going down. So we're terminating the session, and but momentum is still divergent. We're still price okay and sine wave okay. So let's say yes. It's a good area to look for a buying entry. It's just what price is going to be the good one. So you can forecast as well that we have this, okay, this kind of trend channel. So as long as we're in that channel, I'll say it's okay to buy. It's just that for right now, it's searching for consolidation. We're working out at 38.2 Fibonacci. So yeah, and momentum signals, great. If that candle closes like that, I'm going to buy this one on a speculative trade. So far it doesn't. You can see, okay, great. It's interesting. We still have 45 seconds to go. I mean, you guys were enjoying me analyzing something I just didn't know about. Now you're going to see me taking a stupid trade right in front of you. Just applying the strategy. For now, you just let it go. The market is trying to find some support. Just wait to see that actually showing up. As long as it isn't, we're just searching for buyers. I think there are some buyers in here, but they're just waiting, just like I'm doing. So as we're all waiting, you just don't want to be the first one to press the button. You just want to be among the first to press the buttons. And certainly not the last as well. For now, all we care about, if the market makes a lower low, if momentum is going below the previous low, we cancel that trade. Okay, so far we cannot manage to find the oversold pattern to trigger. But momentum remains above the previous market low. So it's okay, it's good, but I want to see bullish reactivation out of here to make sure that we found a suitable price to trade. Sorry, I'm just going to move my mouse, be ready to buy. I think we're good. I think this one's the good one. So just going to wait for the close, as usual, as it is. We need to wait to make sure the market has terminated the bearish impulse. And normally if the candle closes like that, I think the next one's going to be the bullish engulfing. And you'll see the momentum reversing as well, which is what I want to see. I just want to make sure the momentum is dipping, is reversing in here to confirm the divergence, to at least reduce the risk. Okay, we're never ever confirming anything. All I'm doing here is speculative trading. So I'm just trying to narrow the risks and taking the trade with an appropriate leverage. So it's really low leverage anywhere in here because I just don't know where to put a stop loss. Stop loss must be placed really far from the current prices. So it's just trying to dip a toe in here and see how it goes. Okay, so inside bar. And now the market will have to pick a choice. Either it's making lower lows and we still don't have the appropriate timing, and we'll make lower lows on momentum, so we're just going to let it go. Okay, we'll let it go. It's not the appropriate price to trade. All right, market's just bearish, so we don't buy. We wait for this. It's no buying. The market could have bought in here. It isn't, so we're just not trading right now. As you can see, bears are strongs. So we're lower boundaries of the trend channel. It's kind of an interesting price to trade anyway, but I'd say unless we manage to make an oh god damn it, yes we have it. All right, if that candle closes like that, that's good. That's the only way we can make this. If that candle closes at the low or doesn't trigger that pattern, I don't buy. Okay, but in here we tested the level, which is the 366 we highlighted. We tested it and we're triggering, and overload pattern, which means we try to get through it pretty violently, and the market for now might be failing to do it. Okay, all right, good. So just a fucking trap. We've got the pattern, we're gonna trade, but we wait for the fucking 42 minutes, because this is a pending candle. It can very well close there, and if it closes there, then you're fucked, and that's not what you want. Yeah, that's nervous, but I would say yes, somehow we're good. I think decent odds. I'm kind of confident right now to press the button. Just need an additional 20 fucking minutes. See, pattern has disappeared. If it disappeared, maybe that's going to be the next level to trade. Maybe 50% retracement. So it's just, we don't know. We actually never know. And that's not what we're searching for. We're not searching to be right or wrong. We're just searching to limit the risks. Pattern is not completed. We're not buying. Did we make a new low on momentum? We made minus 100. No, we still haven't made a lower low. But I think we will. Okay, may I just sum up informations right here. What is going to make me press that damn button? Option number one, we clear up, we're closing a pattern, triggering a pattern with a valid candle close. Option number two, momentum is starting to rise again, and we make a bullish engulfing pattern. If we make this, I mean, candle closing above the previous candle's high is going to be a trigger to me. So far we're doing none of those two, so I just do nothing. But we're still trading interesting prices, and we still have a momentum okay signal, so yes, so far we just let it go as long as it is. Alright, bears are really in control. We're reaching out interesting prices. You can see we've got a low volume area in here. Let's see how it goes. No. Yes, we got a tiny low area, so it's kind of a breakout trade to happen in there. So we'll see if the market wants to break this level down or not. If we're holding it and making the bullish engulfing, that's confident to me. Alright. Let's see how it goes. Two lower shadow candles in a row on the same level. Either we're going to break it down or make the bullish engulfing at some point to terminate the bearish activity. But I think we're mature enough right now. We've been going, how many candles? 1, 2, 3, 5, 6, 7, 8, 9, 10, 11. Yes, that's 11. So guess what? I'm going to take a 50% trade right now. Alright. So just took €1 per point. Just right here right now. I want to put 2. So I just put 50% in the table just right now, hoping for a good trade to take place. If it doesn't, no problem. Okay. And if we have bullish engulfing, I'm just going to put the additional expected leverage. If we break down that trend channel, that's no good sign. I'll basically take down that trade on the pullback, but I think right now is kind of the last time for us to... You don't do that, okay? I'm doing this because I have reasons to do it. But just and to be clear in here, just put it half the trade in here. So it's just the trade size itself is very low, and I just put it 50% of that very low leverage in here because we're trading the level, and I expect the market to either break through it or reactivate brutally in here because we're at that daytime. As you can see, I bought because we've got volume in here. It's the only reason. I know something's gonna happen. I just don't know why. But I don't want you guys to trade like that. Okay, you're here to learn about applying the strategy. So you wait for a fucking candle close and make either a bullish engulfing pattern or or anything else, but you just wait for this, okay? You should wait when you apply that strategy. I bought because I have reasons to do it, but there are reasons you shouldn't be concerned about. I just like to wait for the trade to play its game, so I can show you the confirmation and defining the stop loss and things like that. It's just for now we're trading at the trend channel, so it has to wait to see if the market wants to push more bearishness, or if the bears stop trading in there and bulls rapidly take it over. We got a 50% fib level right below. The market could just make a kind of a lower shadow candle to trigger this. All I'd like to have right now is some kind of momentum pattern, just make sure that we're in there already enough. Okay, so maybe we go for the fib. Oh gosh, you see, patience is key here. Let me just use another trick. Okay, so you know about the sine wave breaking target. That's a tip. Okay, you take that, the highest closes. All right, you've got the potential target. So sine wave, the graphic version of sine wave should put your target right in here normally. So yes, the market is searching for the target, breakdown target in a range. So generally the market will buy those prices. All right, here we go. 2 minutes to go. We're breaking the previous candle high. Let's see if we can make the damn fucking bullish engulfing. Things like we have our candidates. Momentum's reversing, getting out of oversold area, and I think that candle, that's why I've done that, because okay, now that we'll see if the candle closes, okay, but now I'm gonna explain you why I bought right here, because I know the German index, and this is a fucking mess to trade. Okay, it means that we're trading intraday, and I'm trading on specific hours. We're trading at 11.5, which is generally the moment the market gets out of early trading. So those who've been selling at the highs this morning are now getting out, and they're asking for out. So they're buying, they're rebuying the intraday sells, and this is the volume I wanted to sell. So I don't know, you never know, but I guess those guys were trading in here. So they're asking out in that candle, and I know that when they do that, generally, when it reverses afterwards, it's brutal, which means that the validation candle is a strong reactivation candle, which means that if you wait for candle closes, generally you're going to be late in trading. You see just how it is. I ask you guys to wait for the fucking candle closes because it's really important. I do this for other reasons that I don't want you to be concerned by. Okay, now it is, I'm taking the final 50%. Candle's been closing, may retrace a bit, but I have an approximate price. Okay, I bought in here and in here, so I got a good price. Now to me, scenario is validated. We've got that double dip. It sounds good enough to me. All right, but you shouldn't be doing that. Okay, you just please, you don't do that. All right. So right now, I've done what I had. So next step, trade is taken, so risk management. As long as we don't break that trend line, nothing to fucking care about, right? Second option, you can just delete that and put a second alert, okay? Other ways to put alerts in here, you can set the alerts to trigger at 50% of the channel. Whenever we reach 50%, you know that you can put a stop loss below that low, but not before, all right? So let's do it. Okay, we're gonna take German index crossing framework 50%. Framework only once. Yes, I want an SMS on that one. Oh no, not necessarily. Okay, go for it. So now, whenever the market will reach out 50%, which is in here, I'm going to be receiving an alert, and that means I'll be confident enough to place a stop loss. The market will have validated that bottom, so I can put my stop loss at the market. And for now, I just stick to that alert. If the market makes a new low, I want to know about it to assess the risk. But in order to make sure that the bottom is safe enough to place a market stop loss, I want the market to retrace 50% of the trend channel, and the level is in here right now. Okay? So I hope you guys have learned quite some things right now. Which I generally don't like to make live trades because I like to be fully focused on educational content when I go down to recording those videos. But right now it's something I've been waiting for all morning long. So generally when you do intraday trades, you just got two opportunities. So there was one earlier today. There was this one I took, which has been invalidated, and the second one that is right now, and this one is working fine. So if for some reasons I just sum up the morning, there was the selling entries at the morning that I missed. You can clearly see the divergence structure in here right at the market top. So no momentum structure, but the divergence. So you could have taken that once the momentum was rising down. So in here there was a selling entry. In here or in here if you just wanted to buy, but that's at the open. So generally don't buy the signals you have right at the open. So I would have said right in here is the first selling entry. Buying entry doesn't work out. Buying entry may work out. We'll see how it is. For now it's still uncertain. As I said, we'll have decent odds to consider that a bottom when we'll reach out 50%. Now 50% is in here. It's pretty close from right now. Okay, we'll see if the market manages to go up here. If it doesn't make a candle close above that level, we'll still have to wait. And oh, sorry about that, but we'll have to make candle closes in here. Okay, I need the candle close, and that's a crossing up. All right, there we go. So that's a done job. And now I'm going to move on. I've been doing my job, so as you said, and normally I just wait for this to play its game, meaning you just put an alert in here for the momentum to reverse, and that's pretty damn easy. So normally I just don't do looking at the market in real time. I just put fucking alerts and go watch for something else. All right. So bye guys. Have a good weekend. Sorry, did I take every questions? No, I didn't. How do we get your framework indicators, shaders, areas on the chart? I'm looking forward to its release. Yes, today. It's coming today, or at least during the weekend. It just depends on my baby boys. Apparently, it's doing fine, so cool. I wish it's good. And the checklist thing. Yeah, have a checklist. Always be one step ahead. And if you're right or wrong, it's the dumb guys' things. Just make sure you have a plan is all we should care about. Why? Because the plan is not meant to be right or wrong. The plan is just meant to make sure you're not going to make stupid reactional trading. You need to be trading with a mindset, and the plan is just going to be useful for one single thing. Prevent emotional trading. Having one step ahead, even if it's right or wrong, fuck it, that's not the plan, that's not the goal. You're not having a mindset just to make sure you're right, and fuck it if you're wrong. It's just make sure that this will help you not trading emotionally when something happens. Because it's a binary choice afterwards. Either the market will follow your plan, that's good, you're going to take a nice gain, or the market will just go on the opposite side and you'll have managed the risk, okay? Build a plan, manage the risk. That is what trading is about. All the rest is bullshit, okay? So cut the bullshit, let it for the dumb traders. Make sure you place yourself into a trading mindset. And as you've seen, that's not complicated, okay? It really isn't complicated. And I don't know for sure that the market has been building its dip in here. It can try to go a little bit lower. I don't really give a shit. It can try to break that low. All I know right now is that as long as we don't get in here, which I will probably trigger stop losses if we go down there, then I will be proven wrong. If the market reactivates in here, I'll take a gain, and that's all I fucking care about. All right? Now, momentum's been making a higher high, so even if we make a new low, I think it's just going to be a divergence. So I have confidence and information right now that even if we go lower, either we'll have to fall apart and I'll trigger stop loss, or we're just going to make something like that, the divergent structure, because we've been making the lower low in here. So normally I shouldn't have bought that low. Actually, you see, I just made a mistake in here because I'm not concentrated, not fully concentrated. I think the market is just going to make a tiny lower low in here because remember what the plan was. The plan was to buy the divergence. We're no divergent because we've been making a lower low. So it doesn't work out. I'm just going to keep the trade for that simple reason, okay? But I'm not going to exit right now. But we may make a new low, just a divergent low, because that was the plan, to buy either a momentum structure or a divergent momentum. Right now we've had neither of those two, okay? So actually I just didn't make my job the way I'm meant to be. I shouldn't have bought in here. We've made a new low, so it's no good. The only thing I should do right now is to buy the breakup or wait for a divergence. If you want to buy speculation, I think the market can just make a slightly lower low. It's probably going to try chasing stop losses below those lows. So no problem. I'm not going to take a stop loss just for this, but I think the bottom is not catched up. The guys are out, are asking out. Obviously they are, but I still think there might be some more bearish demand. All right, lunchtime. Bye, guys.